In this video, guys, we're going to talk about what is the best trading indicator. Stick around. Hey traders, a very warm welcome to you. My name is Mark. Thank you so much for joining me. You want to know what is the best trading indicator? I am going to tell you. Price. Before you go, what are you talking about? I want to know the answer. I'm going to run through these, but let me just tell you this. Price is the best indicator. If you've come on this video, which probably you have because you want to improve your trading, you're like, I'm not quite getting it, something's missing, I need some confidence to pull the trigger, I need some sort of strategy, I need this, I need that. We've got videos that cover all that, but price will tell you everything you need to know. Now, I'm not against indicators at all. I do use them from time to time in various different setups. Some setups require them, some setups don't. But do this, just try this. Before I go into this stuff, try this. Take everything off your chart, everything, and just look at price and look at where it stops, where it has momentum, where it stalls again, how far it moves. Look at the duration of moves in time across the x-axis. Look at how much it's moved in terms of y-axis, and just eyeball it. Sit back and go, is that an uptrend? How strong is the trend? You are now a moving average, basically. Really strong trend, boom, boom. It's a 5-period moving average. Quite a slow chugging trend, maybe it's a 50 period. So you can eyeball and see exactly what you need to see. Now, do you want to sometimes use these to assist some things? Absolutely. Maybe as a filter, maybe say, hey, this is a great trend. I like buying pullbacks, but I never buy a pullback unless we just poke under the 20-period moving average. Perfectly good strategy, fine. But that's to solve a specific problem. If the problem you've got is, I don't know what I'm doing, I don't know how to trade, I'm struggling to find entries, I'm losing money, I don't have any consistency, the answer isn't an indicator. The answer is to clear everything off and then just go through a process. What's the high? What's the low? What are my big key levels? And what do I expect the market to do? And get better at that. Use that as a drill. Get better at understanding price, understanding what happens after a sequence of candles, 2 or 3 big candles, what happens next. You know, just get a feeling for the market you're trading. That will give you the edge, not an indicator that anyone else can use, anyone else can download, anyone else can tweak and adjust, and the settings adjusting those as well. You know, tiny little adjustments. Oh, I need a 19.25 moving average. It's not going to cut it. It's how you perceive supply, demand, how you perceive flow, how you perceive all of this stuff is going to help you become a good, profitable, consistent, successful trader, not an indicator. So, if you're still here, and I've still got your attention, you've gone, well, that's not the answer I wanted to, I'll just give you some pros and cons of some of the big ones. So, moving averages are just going to help you to negotiate, to assess the trend. So a really short-term moving average, like a 5 on a daily, is going to be like, wow, really aggressive trend, bang, 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 bang. 20, much less. 20-period moving average, okay to use, I think. Not a 20-period and a 5, my 2 favorite moving averages, I'm going to use them for different things. One, aggressive buying, one, a deeper pullback. I think they're okay. Buying a first pullback after a good trend move to a 20-period moving average, not a bad strategy. All right, stochastics. Stochastics tell you, and we'll put RSI in that, they basically tell you overbought or oversold. Now, those terms tend to infer a reversal, which is not always true. Stochastics can stay overbought for a long period of time. They basically tell you where price is in a range, effectively. Give or take, wouldn't look into the formula, that's what they do. So stochastics, one way that I like to use a stochastic or RSI is when we have a trending environment, the first counter trend move, if the stochastic goes low, oversold, I might look to be a buyer at that position. If we've got a downtrend move, this first overbought reading on the stochastic, I might look to be a seller. So you get a continued low stochastics, bounces back up, stochastics go overbought, I might look to short that for a revisit to lows. There's another one. Okay, Bollinger Bands. Bollinger Bands really are kind of, and let's do Keltners as well. So Bollinger Bands, Keltner Channels, Keltner Channels and Bollinger Bands are based on a moving average, so moving average there, and then they're basically a band that goes around. A Bollinger Band is a standard deviation, Keltner is an ATR, which is a little bit better, it's an average true range. So a price can move out of a Keltner and stay out of it for a longer period of time. A Bollinger Band moves because it's a standard deviation. they're quite good for mean reversion in range band environments. In a range band environment, sticking a Bollinger Band and a Keltner on and just fading those moves, or at least looking to be a seller at the high end of the Bollinger Band and a buyer at the low end in a range bound market is a pretty reasonable strategy. What about VWAP? Now VWAP is volume weighted average price. This is the one indicator I will always have on my chart because institutions use it. Institutional algos use it as a benchmark for execution. If they can achieve VWAP or beat VWAP, that's what they try to do. So very often, get it up, put it on your chart, and just see. And you can see how price very often hugs that VWAP, moves away from it, comes back to it. Plenty of trades to take from that. Market moves away from VWAP, first come back to it. You can often buy that VWAP for a further move higher. Or very often market might close at VWAP. If it's been oscillating around it all day, it might find that as a magnet and end up closing at the VWAPs. If you're trading intraday, there might be something to explore. ATR average true range, good for your stops, this one. Gives you the average true range of the market that you're trading, as in how much range does it normally do in the day? Is it 100 pips, is it 200 pips, is it 500 pips, 50 pips? If you're trading currencies, is it points in Dow? And so you might go, hey, actually look, volatility is quite high, average true range is running high, my stop is 30% of the average true range, for example. You might use it as a fixed stop reference point. You might use it as a price target. You might say, hey, I want half an ATR for this trade. And so there's different ways of using that as a filter perhaps as well. ADX just tells you if you're in a trend. Not my favorite one out of all, it's probably my least favorite because you can eyeball the trend. And you can say, hey, trend is a trend, that looks like a trend to me. ADX generally when it's above 30 indicates a trending environment. You could use it as a screening filter perhaps. And you could say, hey, I'm gonna put a screener on one of those screening platforms like FinViz or TradingView and say any stock that's got an ADX above 30, a daily ADX above 30, I wanna look at it. And that will show you roughly most stocks that are in a trending environment. Doesn't necessarily, or it doesn't at all show you the direction of the trend, it shows you whether there's a potential trend. And Fib, so Fibonacci, you've seen those on, you maybe seen those on your charting platform, you can extend those and move those. I think they're okay, but again, this is going back to what we're doing, the theme here of some sort of a way to use it. So Fib you could use is, you can use the extension part of it to say, hey, that's where a breakout could run to, or one nice way to do it after you've had a big extended move, run your Fib on it and kind of look to buy, maybe pull back to 50%, something like that, or you use the next level as like a stop and frame the movement with a Fib and go, well, actually, if it's in the top kind of half, I'm okay to start buying. If it's in the bottom, I'm not, and just frame things a little bit. And maybe it helps you wait for your trade. If you see a big move, you're like, well, I'm not going to buy it until it starts to come back a little bit more, and you can color and you can shade your colors in and stuff. So, and least favorite for me as well, because I think that sometimes when market has driven hard and it starts to come back, again going back to the initial thing, price will tell you because it will start to find some support. That might happen to be on a Fib number, but it might also happen to be nowhere. And I prefer to just look at it cleanly and go, you show me where you want to find support market. And I look for supply-demand imbalances. I look for the turning, I look for some sort of structure to the trade, and then try to initiate a trade from that, put my stop in an obvious place, think about where my target's going to be, and structure the whole trade from the price that I see, or the price action that I see. So anyway, guys, what is the best trading indicator? I think it's price. I think if you want to find something that works for you for a long period of time, if you can just look at price and start there, that's great. But if you have a specific style or strategy and you want to explore something, then there's some there that you can look at. Take care. See you next week.